believe both gold and Bitcoin. My projection for next year, kind of calendar 2025 year end, gold will probably be at $4,000 and Bitcoin will probably be at 150 or 200,000 dollars. So I think there's a real day of reckoning coming with the stock market, which is a bad thing. Their hammer is the printer, and so every financial problem looks like a nail. And so they're gonna turn on the printer.
Lawrence Lepard returns to the show. He is a managing partner of Equity Management Associates, Bitcoin, gold, equities. We'll talk about all this. Welcome back, Lawrence. Good to see you.
Hey, good to see you, David. Thanks for having me back on. I always enjoyed talking to you.
Always enjoy having you on the show. Lawrence is a fan favorite. Check out our last interview with him. Link down below. Biggest movers of the day. So gold is down 3%. Bitcoin slightly down, almost 1%. It just doesn't...
I actually think Bitcoin's down 3% if you measure from last Friday.
Yes,
so
that's
it's only
true.
down 1% today because it trickled down over the weekend. So, yeah, they're both getting hit.
And it's just hitting that resistance of $99,000. I know everyone was watching that 100,000 mark.
They were
Like
hoping,
when was it gonna tip over that mark? And it just didn't get there. So we'll talk about that. S&P's up slightly. Nasdaq is flat. So let's read the news today. Take a look at my screen. So it looks like the stock markets are happy about the fact that Scott Bessent was picked as Treasury Secretary. Any thoughts on that, Lawrence?
Yeah, absolutely. I mean, that obviously is the news of the day, and it's the Trump trade is on that he's gonna that the Trump and Bessent and Vivek and Elon are gonna solve all our problems. And while I actually applaud this choice, I think Bessent is a very smart guy, and given how bad the U.S. fiscal situation is, I think we need a very smart guy in that seat to help the country. I don't share the market's enthusiasm for how much progress they're going to be able to make or how simply they're going to be able to solve this problem, because the problem is quite deep, and I think they're going to really have their hands full.
And it looks like he has a softer stance on tariffs. I would recommend that tariffs be layered in gradually, Bessent said in a CNBC interview. If you take that price adjustment coupled with all other disinflationary things President Trump is talking about, we're going to be at or below the 2% inflation target again. Do you agree?
I think it's possible in the short term. Housing is a big component of the CPI, and I think recently housing has started to show signs of softness, which would be a very big positive. And I was just on a panel with Danielle Martino Booth, and she said she thought we would see some housing price softness. So. And of course, that's all a cooked number because they do owner's equivalent rent anyway. But look, Bessent's going to be smart about it. Although I think the tariffs to me are a negotiating tactic. They're gonna basically go to other countries and say, play fair. We're going to hit you with a tariff. The positive about the tariffs is that they actually will raise revenue for the government, and the government needs to raise revenue everywhere it can.
Yeah.
So. Look, these guys are thinking correctly and cutting expenses. They're thinking correctly about that. But the point I would make there is that, we spent 6.75 trillion last fiscal year ended September. 80% of that is Social Security, Medicare, interest, and defense. So, when they talk about taking a hatchet to government and cutting government, unless you're going to touch those four areas, and they might touch defense a little bit because they might be able to end the Ukraine war. It's going to be hard to cut. So the remaining 20%, even if you take 30% off that's $270 billion a year. The deficit last year was 1.8 trillion. The run rate on the deficit this year is 2.4. So, the deficit's a real problem, and the debt growth is a real problem. So they're going to have their hands full.
It's a real problem for, I guess, the economy overall, but could it be a boon for certain assets?
It could be. It could be indeed, especially if they end up going to yield curve control and printing money to address it. And I think that's what's going to happen. It's obviously today isn't reflecting that because gold's down $80 and Bitcoin's soft and so forth. But, what I've been maintaining up until today, and I still do longer term, is that we're in a sovereign debt crisis. The fiscal situation is out of control. And you're really seeing this when you compare, the last 3-year performance of Bitcoin or gold to debt. And I just did some charts on this, which are on my Twitter feed for this New Orleans conference. In gold terms, compared to the bond, the gold's up 170%, in 3 years, and Bitcoin's up 3,000% in 3 years. And what this tells you is that the bond market is, in my opinion, in the process of failing. I mean, one thing that's interesting, as you know, I know, is that they cut interest rates, the Fed cut interest rates, and yet, the 10-year has gone up 75 basis points. So that's not supposed to happen. And it tells you that the Fed is probably too loose. And yet, because they are, the ones setting the short-term rate, and Janet's using the short-term market to fund a lot of the debt that's rolling over, they're under a lot of pressure to keep cutting rates in an effort to, make the U.S. funding costs not go up, because interest expenses running at a $1.2 trillion rate, they certainly don't need that to get worse. So
Could a rise in the 10-year and sustained rise in, I guess, the long end of the curve be also kind of a quantitative tightening force as well?
it is, yeah, it is in a backward sense. Now, they've got a lot of things they'll do, though. I mean, Becente's got an interesting trick up his sleeve. He's talked about maybe, Powell's term doesn't expire until early 2026. And Becente's talked about maybe appointing his successor, but, announcing who his successor was going to be beforehand and letting that guy give speeches. And so, in a sense, it'd be 1 year out forward guidance of what, it's an interesting concept. So yeah, so the Fed and the Treasury are going to quote unquote have their hands full, in my opinion, in the next 6 months. And particularly if something happens to the stock market. I mean, for those of us who are market historians and have looked at the market, valuation wise, I mean, it's hard to overemphasize how extremely overvalued this is. This is like in the top 1% of valuations ever. It's more overvalued than 29. It's more overvalued than 2000. I mean, there's a lot of good analytical work out there that just shows that the free money that we had, the ZERP and the low interest rates that we have blown an enormous stock market bubble. And if nothing goes wrong, valuations can stay stretched for a long period of time. But if something goes wrong, the stock market turns. A lot of people are in the stock market. Everyone bases their economic spending patterns on how the stock market is doing. And for some reason, for whatever reason, heaven forbid, the stock market turns, it's going to make, this entire situation, it's going to turn it into a mess.
But does it need a reason to turn?
I don't know that it does. I mean, sometimes they say it's just exhaustion, right? I mean, the last buyer shows up and there's nothing more. I mean, that's the other thing at this conference in New Orleans. I saw Bob Prechter had a great chart on sentiment. I mean, the positive, the sentiment charts. There are no bears left. Everybody's bullish. I mean, there are literally no bears left, and the sentiment charts are off the chart, so to speak. So, and that's usually, when that occurs, everybody's all the way in, and when we run out of new buyers, it'll eventually start to go the other way. But that could be now, that could be 6 months from now. David Hunter thinks we've got another 1,000 points to go here, or maybe a tad more, as the Fed keeps cutting rates and people get excited about Trump.
Before we continue with the video, I want to share a unique way to diversify wealth with art. According to Deloitte, the art and collectibles wealth held by ultra high net worth individuals could reach $2.9 trillion by 2026. Earlier this year, Bank of America reported that 83% of multimillionaires under 43 are already collecting art or looking to add to it to their portfolios. That's where today's sponsor, Masterworks, comes in. They make it possible to invest in shares of high value, blue chip contemporary art without needing millions or a deep expertise. So far, Masterworks has returned over $60 million to investors across 23 exits. With the art market currently at lower price points, it's a rare entry opportunity. In fact, Masterworks recently sold a Basquiat piece earlier this year for $8 million, delivering another profitable return. Scan the QR code here on the screen or go to masterworks.art/David Lin and the link down below to skip the waitlist and get priority access today. Maybe it's when, like you said earlier, perhaps the labor market isn't doing as well as the top line numbers suggest. Maybe the labor market slows down some more. That's when the recession, where I guess earnings start to fall, margins start to contract.
I think that's right. I mean, it also has a little bit to do with the consumer being tapped out. I'm part of the reason the economy and the consumer got hit badly with all the inflation in the 2020-21 period.
Yeah.
And the way they dealt with that was they borrowed. They tapped their credit cards, they tapped their lines of credit, they took on more credit for their automobile purchases, et cetera, et cetera. And if you go look at the charts on those statistics, you can see that consumer credit is just gone. People have maintained their lifestyle by going into debt. But, the one thing that happens when you do that is you've got to make the payments. And if you can't continue to grow that debt balance, the same thing happens to you that's happening to the government, which is to say, if you got to take out a new credit card to pay the interest on your old ones, you got a problem.
Yeah. Actually, that's a good point. What do you think is a bigger drag on consumer spending right now? The rising debt levels and the higher interest payments that households have to make, or the high price of homes?
Oh boy, probably the high price of the interest. I think inflation, what they're paying for food and everything else. But I also think, yeah, the interest payments. I mean, the interesting thing about the housing market is I've heard about it. I've talked to several people about this. Housing market's kind of frozen. You've got because as we now know, there was a time where mortgages 4 years ago were 3%, right, which is a great rate. Powell tightened, mortgages went, I don't know, 7% plus. Then, as he announced he was loosening, they came back down for a while, and I think some people were getting some lower numbers. But now they've been going because the long bond is going up in yield. The mortgage rates are up again, and so you're seeing all these people who, and I know people in this condition. They have a house, it's too small. They want to buy a bigger house, but the house they have has a 3% interest rate. This is in the United States. The house they want to buy is more expensive, but they'd have to pay a 7% interest rate. Well, they can't afford to do it. And so they're trapped. And so, you're seeing less volume in housing, turnover in housing, because you've got these people who are trapped and people who can't afford the new higher price mortgage.
Yes. All right. Turning back to markets. So Bitcoin. Let's talk about Bitcoin first. We'll come back to gold.
Sure.
100K is elusive. We've been waiting
Yeah,
for it all
it sure
weekend. It
is.
just is a little.
Yeah,
Is there just a lot of selling pressure right now? Is that
maybe.
what's
I
going on?
yeah, I don't know. I don't look that short term, and it's just a number. I mean, the more important thing to me that I found so interesting was just how strong and persistent the breakout was. For those who've been following it, Bitcoin had kind of been trading sideways for quite some time, and there was a joke on Twitter about the 58K club, and 58K was the bottom, and kind of high 60s, low 70s was the top. And I always sensed that when it did break through the 73, 72, 73 area, it was going to squirt higher. And boy, it sure did. It went it kind of straight line from 70 something to 99, as you know. Wouldn't surprise me at all if it cooled off, but it also wouldn't surprise me if it continued. Bitcoin is much more volatile, and history shows when it does go on these runs, that tend to you get some FOMO, and it can go for quite a while. I mean, my ultimate target on this cycle, and I measure the cycles in kind of 4 year terms, which a lot of people do,
Mhm.
kind of based on the halving. And my target for this cycle, the top is closer to 200, maybe a tad above it. So we're not, we're halfway there, a little under halfway there. But obviously today it's getting hammered, and it wouldn't, it's not unusual either for things when the breakout to go back and test the breakout point. So I think I'd be very surprised if it went below 73. I'd actually be surprised if it went back to 73, but could it retrace a bit of the recent gains? Sure, it could. A lot of it depends on how many of the buyers in the last, month or so have been doing so on leverage and have been doing so with speculation. When they suddenly realize that 110 isn't imminent, and they get scared, they're going to bail. And so we'll have to go back to 90 to build a new base at 90 or something. I don't know. That's just a thought. I mean, it's very hard to tell. And I never trade it. I never sell it. I just have my Bitcoin, and that's that. I view it as a long-term, store of value, very much the way I view the gold that I own as a long-term store of value.
When you say 200,000 as a cycle top, when did this cycle start for you?
It kind of started in the when it was kind of trading around 50. I mean, the bottom was
Mm.
15, as you know, after FTX, but it kind of
Yes.
based for a number of years around 50-ish, 50, 58. I don't have
Okay.
a chart right in front of me, but and the history of these cycles is they tend to go to, four, five, six times, the base. So that would imply that we could get to, 160, 200, maybe even high as 250 or 300. I don't know. Then it would be quite extended above its 200-day moving average, and it would be quite extended above the power law model, which I think has validity because backtesting the power law model has described 97% of the movements. So it's the thing I think people have to keep in mind is that it's a volatile asset. with a strong bias upward. And I've always recommended people have a little bit of it, or the only wrong allocation is zero, and you should dollar cost average on your Bitcoin purchases. I mean, I was buying it at 15, buying it at 30, was buying it at 50, was buying it at 70. When I get some more money, I'll buy it at 90. I think it'll be much higher in 5 or 10 years, but between here and there, it could go up and down a lot.
Okay, so basically it'll 4x from its bottom in the next cycle. What's your thesis there?
Because that's if you go back and you look at prior cycles, that's kind of what's happened. In earlier cycles, it was actually more than 4x. And it actually it's not just the X, it's kind of the standard deviations off the base. This is the power law model. But there were some of the earlier cycles you actually got like 9x off the bottom or off the base. But it's, with each as it grows up, as more people
Yeah.
hold it, as it gets more widely distributed, you see that the ups aren't as bad and the downs aren't as high and the downs aren't as low. The first drawdown I think was 90 some odd percent. More recent drawdown, last drawdown I think was 70-ish. And I expect these drawdowns to move to the 60s and 50s and 40s. I mean, over time, as it gets more widely distributed.
Do you think that the altcoin market will pick up as well, or do you think this is a
It
Bitcoin
probably
centric rally?
it probably was. It will. It tends to follow it. I mean, I'm not a big altcoin fan. I mean, I
Mhm.
don't own any altcoins. I don't believe in them. I know there's some apps being built that have value, and so I don't condemn all of them, but I just, from a monetary policy point of view, I mean, I view Bitcoin as a digital form of sound money. Gold guys hate me when I say this. I just argued with Peter Schiff all weekend at this show about it. But, um, I view Bitcoin as really kind of a digital form of gold. I mean, it's a limited supply digital asset, which, for some gold people, that's hard to get their arms around because you can't touch it. But it's an immutable ledger, and money has, in my opinion, always been a ledger. And as long as you know that the network's going to keep working, there's risk in that. But as long as you believe that, then it's a logical conclusion that something with a fixed supply that more and more people are using and growing and going toward will increase in value over time. And that's obviously what we've observed. I mean, this has been the best performing financial asset in the last 15 years by quite some measure. And that's just a fact. So, whether you love it or hate it or emotion or whatever, it's just performing really well. And so then you kind of say, all right, somebody says, well, the bubble's going to burst. And I say, fine, what's going to change that? What's going to stop it from having that performance? I mean, the only thing I can think of is just catastrophic failure. And, I was worried about that.
Catastrophic failure, like what, hacking, or what do you mean?
No, I don't worry about hacking because it's techno, secure. And people are worried about quantum computing, but I think that's too far off. I don't worry
Yeah.
about that. No, just I don't know. I mean, just some bug that we're not aware of that just causes the whole thing to blow up. I mean, I was worried about that much more so in the earlier days. We're now 15 years in and 870,000 blocks into it. I think the odds of that are quite low.
Are you worried about the risk of higher concentration of ownership of Bitcoin now that ETFs are approved and it's going to become more institutionalized?
Well, there's, yes and no. I mean, I mean, they obviously represent honeypots. I mean, to those of us who are hardcore Bitcoiners that believe in self-custody, look, the ETFs came in and they were a really positive thing because what they did, they said to a lot of my friends who wouldn't buy it because they said, well, Larry, I'm not going to buy that because the government's going to outlaw it. Well, suddenly the SEC says it's legal, and not only is it legal, but we're creating an ETF. And all those friends said, oh, okay, I get it. You're right. Maybe I should buy some. And they did. Um, the the issue that's going on there is some risk inherent to it is all those ETFs now own a ton of coins. In fact, there's a great chart that shows the growth of the ETFs, and it's stunning how big they've gotten and how quickly they've gotten that big. I mean, compared to the gold ETF when it was launched, and that one did very well, by the way. It's stunning how quickly the ETFs have grown. But here's a threat. The U.S. in 4 years we have a blue wave. We go back to a Democratic administration. The dollar's failing, inflation's high, and the socialist Democrats decide that Bitcoin is the cause, or Bitcoin and gold are the cause. It's these sound money people. They're ruining our beautiful Keynesian system. And furthermore, they know what Roosevelt did with gold, where he confiscated it. Furthermore, they're going to pass a law that says that the U.S. government's going to seize all the Bitcoin, and so you have your Bitcoin at Fidelity, or you have your Bitcoin at iBit, or Coinbase, wherever it might be. They're going to send you a check for the dollars, but they're going to take the Bitcoin themselves. And so it's, kind of a 6102 attack. That was the executive order that Roosevelt used. And so that's somewhat problematic. I mean, if that kind of thing occurs, I'm not saying it will, but just like everything else in the world, the government, the thing I think it's important for people to keep in the back of their mind is the government will always do what it has to do to keep itself alive until we get it under control. And so that fear is in the back of my mind. But Bitcoin has a solution to that, which is to say, if you self-custody your own coins, you have your own wallet, your own keys, and the government says send it in, you can kind of decide whether that's something you want to do or not. Now, they can send men with guns to your house, I suppose, but you could also get on a boat and go to some other country. So, will that happen? I don't know. I rate that as a low probability, but not a zero probability.
People are excited about the Bitcoin strategic reserve. Take a look at this FT article. The delusions behind a Bitcoin strategic reserve. The bill lays out a mechanism for paying for the reserve. Any surplus the Federal Reserve returns to Treasury will be spent instead on Bitcoin. The Fed doesn't currently return any money to the Treasury. A reserve would present both a consummation and an irony for Bitcoin's hardcore supporters. The hodlers, the state would recognize what hodlers call freedom money, but also prop that up with a state program. Okay, a bit of an
Yeah,
irony there. So, what is your
there
overall
really is
take?
this. So it's interesting. The Bitcoin community is going to divide on this, and I'm not quite sure where I am. Um, so there's a part of the Bitcoin community that's absolutely completely anarchist, and we don't want them to buy it, or those people don't want them to buy it because they don't want the state to survive. You know what I mean? So their view is, I hope they don't do a strategic reserve because I want the fiat to fail, and therefore the government will fail. We'll get a new, we'll do a new system, a new government. There's another part of the Bitcoin community that's kind of like, no, I want to pump my bags. I want the state to buy it because it'll push the price up higher, and I'm American, and I want the U.S. government to succeed and live. And I've got a foot in both of those camps. I mean, I understand both points of view. Somebody said to me earlier, said, well, how are they going to buy it? I mean, earlier in that article, it says, well, the Fed is going to remit any excess to buy Bitcoin. Well, I don't know if anyone's looked recently, but the Fed is losing a ton of money,
Yeah,
right? And
yeah, they are.
they're calling it they're calling those losses a deferred asset, which I find hilarious. But the Fed's not in any position to have excess money to buy Bitcoin. However, they can print money, and if the government decides to pass a strategic reserve law and print money to buy Bitcoin, well, they would kind of be doing what Michael Saylor is doing. And there have been some arguments that doing that would be smart, and that the appreciation in the price of Bitcoin might allow us to defease the debt, and thereby, make Social Security and Medicare secure again. Because right now they're really not very secure. I mean, those are going to have to be defaulted on if we continue down the road we're continuing down. So, yeah, it's an
Okay,
interesting
well,
problem.
this
Yeah,
sentence addresses some of the fears that people may have about selling of the Bitcoin strategic reserve, the dumping of
yeah.
the strategic reserve and moving the price down. Unlike a traditional banking reserve, however, they would be held by the Treasury and couldn't start to be sold until 2045. An asset you cannot sell does not give you resilience; it gives you storage costs. Okay,
First of all, there's no storage cost on Bitcoin. All you need
yeah.
are the keys. It's free. And I don't know why they don't think it gives you resilience because it's the best performing asset ever and it's going to go up in value. But yeah, look, the FT is on the other side of this. I mean, the establishment does not like Bitcoin. Let's face it, most of the establishment does not like Bitcoin. For this, I actually give, Vivek and Trump and, others around him, RFK, credit because I think they've, Trump got educated on this. I mean, let's face it, not that long ago, Trump used to really talk badly about Bitcoin.
Hmm.
And he's come around and changed his view. And I think somebody got in his ear and explained to him the benefits. And he was kind of like, oh, yeah, I get it. I mean, he wants, he wants the country to return to sound money if possible. So, yeah, but it'll be interesting to see what happens here, David, because, I don't know if they have the votes to get it through. I mean, it's arguable as to whether is this really something that should be adjudicated in Congress? I mean, could the Treasury just decide to set one of these up? One thinks they might be able to. If you look at what Roosevelt did in the 30s, right? He didn't go get a congressional approval to grab the gold. He just did it. You know, he just said, "I'm issuing an executive order. I'm grabbing the gold and I'm repricing it. Boom, done." So, is this, in theory, the monetary system is controlled by, the Constitution and delegates the responsibility to Congress, but in practice, and says it can only be gold and silver. Of course, we've walked all over that. We don't do that anymore. And in practice, Roosevelt took it unto himself and did it. And when tested by the Supreme Court, they upheld what he did. So, it's who knows? Who knows what's going to happen? I mean, what I believe should happen and this is where I hope Percent, is intelligent about all this. We really need to do a monetary reset. The guy who's actually been talking about this the loudest and has the best plan is Luke Gromen, who's a macro analyst. We really need to. We've got too much debt, and we can't pay it all back. And I'm sure most of your listeners are familiar with the concept of a debt jubilee, which was used in biblical and Babylonian times. When the debt got too large, they just forgave it all and started over again. And we could do something similar. We could establish a new currency, back it with a sound backing, whether it be gold or Bitcoin or some combination of the two,
Mm.
and say, the old currency, it's devalued in terms of the new currency, and then suddenly the old debt would become manageable. That's an entirely possible path, and it would be a fairer and more balanced and less chaotic path than the one that we're on, which is, let's just keep running up the deficits until we can't do it anymore and the whole thing collapses. Or we print money and we either collapse because we stop printing money and we have deflation and we have a depression like event, or we continue printing money and it compounds on itself and eventually that becomes super high inflation, and we get a Gresham's law event. So, all of that, both of those paths are messy paths. There's a more intelligent way to do this. And another person who's thought a lot about this is a woman named Judy Shelton, who Trump nominated for the Fed board. And of course, Congress and Senate just savaged her because it's safe to say, as I'm sure you know, and I think this is true in Canada as well, there aren't a lot of people in government that are really big fans of sound money. Right? They, they like the system they got.
So you've got a debt problem. You've got
Yep.
solutions that are probably theoretical. In theory, then, how would a rebasement to a gold or Bitcoin, even a Bitcoin-backed monetary system, how would that help with the debt problem?
It would mark the debt down in real terms. You would say, I mean, as Luke's example would be, we have 261 million ounces of gold, or they believe we do, and we might. You would say suddenly the U.S. is going to buy and sell gold at $20,000 an ounce. For every $4,000 you mark it up, or every $1,000 you mark it up, no, $4,000, you get $1 trillion into the TGA, and you use that to pay down the debt. And we get the debt to a manageable level again. Now, if you mark gold up that much, that would be a very inflationary event in worldwide terms. And so the US would suffer pretty severe one-time inflation. And I think the bottom line is there's really no way out of this without pain. I mean, it's kind of like being an alcoholic. I mean, we've been drinking too much, and we've been, dealing with a hangover by drinking more, and we got to stop drinking. And then, and that's a painful process, stopping drinking. But guess what? If you stop drinking and reset to a sound money standard, then we'll go back to having a normal life and a normal economy, and inflation won't be the big problem that it is. And we'll be able to meet our commitments, and there won't be all the political strife and the wealth inequality. I mean, all the problems that we're solving from right now, in my opinion, emanate from the issue of having an unsound currency, and that started in 71. And if you don't mind, I'll make a little pitch here. I'm writing a book about this, and the book will be out in the first quarter of next year. And the topic, the thesis of the book is the fact that we don't have sound money is why things are so broken. And then I talk about what you and I were just discussing, like ways that we can fix this so that our kids and grandkids won't have to deal with this stuff.
Wait,
So,
what's your book called? Tell us about your book.
uh, the title is a secret, and the reason it's a secret, it's a really cool title, and I don't want to let it out yet.
All
But
right.
it'll be out soon.
Okay. Well, we'll stay tuned for that.
Take it at face value. The thesis is sound money, or I think it's the byline is why America is broken and how sound money can fix it.
Okay.
That's the byline.
Pretty good. Pretty cool. This
Yeah.
is the actual bill, Cynthia Loomis's bill on the Bitcoin Strategic Reserve. So this paragraph in particular, implement a 1 million unit Bitcoin purchase program over a set period of time, approximately 5% of total Bitcoin supply, mirroring the size and scope of gold reserves held by the US. Why do we need a gold reserve now in the first place in 2025? and why do we need a Bitcoin reserve for that matter?
Yeah, so I think both of these things they're both great questions because they're both forms of sound money that we can use to mark our balance sheet up against. I mean, if you're going to devalue the dollar, the dollar we've made too many dollar commitments, we've got too much dollar debt. That's the fundamental problem, correct? Good. So what do we have to do? We have to devalue those commitments in terms of something else. And the something else is a form of sound money. And the two natural choices, there are really only two in my view, are gold and Bitcoin. Gold is analog sound money, Bitcoin is digital sound money. So as a result of that, if you're going to devalue the dollar, and this is what Roosevelt did. I mean, Roosevelt grabbed the gold and then he immediately changed the price from 20.65 to $35. It was like a 70% devaluation overnight. And what it did, and by the way, it helped right after he did it, 34 was a pretty good year. And so if you're going to devalue, if you've got too much debt, it's like doing a restructuring. It's like if you you owe 100,000 on your credit cards, and the credit card companies know that you can't repay it. They just know that you're bankrupt. You can't repay it. So what they would say to you is, okay, I tell you what, we're going to cut a deal with you. We're going to write that 70,000. Now it's going to be 25,000, but you got to repay it. You got to repay it in sound currency. It's the same kind of idea. We're gonna devalue the debt in terms of something else, and the something else is going to be the new form of money, and the new form of money is going to be sound so that we can't print it. And so, this alcoholic that used to have alcohol all over the place and could always go grab another bottle and get drunk, well, we're going to take away all the bottles, you know. So, because you can't print gold, you can't print Bitcoin, right? That's kind of, I mean, did I answer your question?
So, do you think they'll be actually used for anything? The gold reserve, Bitcoin reserve. I mean, is it just storage right now in case if something happens, or will they have practical use cases within the
Well,
treasury?
yeah, they at a central bank level and maybe even at a national bank level, they could be used. I mean, if you really want the paper currency to have valuation, in those terms, you've got to be willing to exchange one for the other. You've got to be willing. I mean, if you set the gold price at $20,000 an ounce, you've got to say as a government, we are willing to buy and sell. You can bring in, $20,000 cash, and we'll give you an ounce of gold. Or in turn, they could say, well, we're going to sell some of our gold and retire $20,000 of cash. I mean, that was the original. That was how in the olden days of the gold standard, that's how it worked. I mean, the way the gold standard worked was there was enforceability between the currency and the metal, and that would have to be the case here as well to have it have teeth and to have it be credible. So yeah, it actually makes sense to have it now as a practical matter. If people trusted it, none of that would be going on. But when people stop trusting it, well, you'd know because there'd be a run on the bank. I mean, in '71, the French stopped trusting that we were going to give them their dollars at 35, give them their gold at $35 an ounce. And so they said, hey, you know what? We don't want these dollars anymore. Give us those ounces. And of course, the ounces were flowing out the door so fast that Nixon said, oh, hang on a second. We're not going to do this anymore. We're going off the gold standard, which really was a default.
On an earlier comment about the Fed losing money, Fed's paper losses topped the $200 billion mark.
Isn't that amazing? Yeah.
This is from their operations, right? But that doesn't the Federal Reserve is not a normal bank, so we don't they're not going to default on their obligations. But okay, so going back to gold, then we talked about Bitcoin. What's your
Yeah.
gold outlook? Gold's down 3% today. Just today, by the way, there's been talks of ceasefires, or a ceasefire negotiation between Lebanon and Israel. Take a look at my screen. Israeli cabinet vote to vote on Lebanon ceasefire deal after Netanyahu approves in principle. Could
That's
could
great.
gold could gold be reacting to a potential de-escalation of tensions in the Middle East? Now, remember, Trump did say that he wanted Netanyahu to end the war in Gaza with Hamas by the time he enters office. Perhaps this is what's going on.
I think that's probably a piece of what's going on in gold today, but I actually think the bigger piece is the hopeful and I would call somewhat fantasy-like belief that Scott Bessent is going to work miracles, and that the Elon and Vivek Doge, Department of Government Efficiency, are going to be able to cut expenses, and that we're going to just get everything back and it's going to be great. We're going to have a really good economy and low inflation, and everything's going to work. And Look, while I would love for all of that to happen, I also know how to look at facts and read the math. And mathematically, it's nearly impossible for that to happen, in my view. So, the market, in my opinion, will eventually come to the conclusion that I've come to because they will start to unpack it and see the math as well. And I believe gold's going much, much higher. I mean, I believe both gold and Bitcoin. My projection for next year, kind of calendar 2025 year end, gold will probably be at $4,000 and Bitcoin will probably be at 150 or 200,000 dollars. They'll both be up substantially from where we are today. And gold stocks will take off. The real cheap asset right now are gold stocks. I mean, as I'm sure you're aware, and you sit in Vancouver, I mean, they just haven't gotten that much love. I mean, gold was up 20 or 30% this year. The stocks are up a similar amount. Typically, the stocks, multiply the return on the metal by 2 to 3x. So gold up 10%, stocks up 20 to 30. That hasn't happened. The reason that hasn't happened is that people still don't believe the $2,600 gold price is sustainable. They think Bloomberg consensus estimates are that it's coming back down to 2050. My view is it's going to 4,000. So, one of us is going to be right. If I'm right, the gold stocks are going to go a lot higher in the next year, which is obviously what I'm betting on.
Are you applying the same cycle analysis to gold as you did with Bitcoin?
I am. It's not quite the same because it doesn't have the halving cycle, but they're somewhat correlated. A lot of people think Bitcoin is just a liquidity widget and it trades with the Nasdaq,
Hmm.
and there's certainly been a piece of that. But I think over time, I mean, it's interesting today that the stock market and the Nasdaq are up and gold and Bitcoin are down.
Yeah.
I think over time, Bitcoin is going to trade much more like gold. It's going to be more as a sound money asset rather than as a liquidity widget like the Nasdaq. And I foresee a time when the stock market bubble bursts. I think what'll happen is the stock market bubble will burst. That'll be very, very deflationary, very bad for a lot of markets. And, the government will have to come in with what I call the big print. And when the big print comes, then you look out. Then Bitcoin's going, I mean, and by big print, I'm talking about the Fed balance sheet goes from 7 trillion to 20. And, Powell says whatever it takes. And this is all because, CRE or something else is blown up and they can't contain it. And, I think the Fed balance sheet will go to 20 trillion, 30 trillion. And as you know, that'll be enormously inflationary. But it'll also send gold to, 10,000 and Bitcoin to a million.
If you, okay, well, the loaf of bread by then will be $10,000.
Well,
So,
that's exactly right. And a loaf of bread will be $500, right?
if you take a look at the Bitcoin versus gold chart, which is what I have here, gold is
Yeah,
the bar chart and Bitcoin is a purple line. If you just
yeah.
scroll back and take a look at history here, over the longer term horizon, if you just overlay these two variables, they have followed each other. I don't know if they followed each other more so than they followed a broader market or they followed Fed liquidity or something else, but there has been a longer term correlation. I'm not talking about the intraday
Correct. That
moves.
is correct. And the other thing that's interesting to note is if you look back, look at 2020. Look at how
Yeah,
gold moved first and then Bitcoin moved. Look
that's
at
right. That's right.
so
Yeah.
and so when earlier this year when gold broke out in March, in March gold went through 2070 and Bitcoin was just sitting there and I had all my Bitcoin friends saying, "Hey, what the hell's going on? You guys are crushing us." And I said, "No, no, no, you're very happy this is happening because Bitcoin usually moves with a lag. Gold is really, really good at smelling and sniffing out monetary debasement. And the
Interesting.
reason gold is backing off right now is it thinks that maybe Basent's going to solve it, and they're not going to have to do the monetary debasement. And what I'm here to tell you is that my belief, strong belief, looked at the math, looking at it carefully, is that they can't solve it. They can maybe take the edge off it, make things a little bit better, and that's probably a good thing for the world because we don't want a messy, economy. We don't want anything to crater and have another great financial crisis. But they can't really solve it, and so ultimately, we're going to have higher inflation, and then we're going to, as that continues, there's going to be a lot of political outcry. The Fed, I think the Fed is really losing its grip on things. I think the Fed's under a lot of fire. There's a book out that I would highly recommend to people, and you as well, David, called "The Lords of Easy Finance" or "The Lords of Easy Money" by Chris Leonard. So here's a guy who is a Wall Street Journal reporter, very mainstream, nothing controversial about this guy. And he wrote this book that is actually a devastating criticism of the Fed and how out of control it is and how it creates these cycles and how they blew the call on so much of this stuff. And so he wrote it and he said all those things. He said them very polite way. My book says the same stuff, but not so politely. Um, and and but here's the thing: he got positive reviews from the New York Times, the Financial Times, the Wall Street Journal. They were all like, "What an amazing analysis!" And so I think the Fed is in a lot of trouble. And I think that, there is going to have to, we are, the problem we are encountering, we have serious monetary issues going on in this world right now. And that's going to, I think, become increasingly apparent, and we're going to have to address them. And, I mean, so, you got a problem. The first thing to do is admit you got a problem. The next thing to do is figure out a plan for how to address the problem. And these aren't fatal. It's not going to ruin the world, but there'll be winners and losers. And to get the problem addressed and to have a better world. I mean, I'm in this because I want my kids who are in their 20s to live in a better world. To get there, we got to go back to a sound money standard.
One final note I'd like to make.
Sure.
What do you think Bitcoin and gold are more correlated to? The M2 money stock, which I'll show on my screen here,
Yeah.
or the rise in the debt to GDP level, which has also been going up in a straight line?
Yeah. Well, obviously they're correlated to this because they both took off in 2020. Just as this went up 42% during
Yeah.
COVID, right? And they both took off like a rocket. So
Hmm.
they're very heavily correlated to this. But keep in mind that this is indirectly correlated to the thing you referenced, which is the debt to GDP, that the government runs. And so, because, effectively the Fed is the monetary mechanism that creates the growth in the M2 by putting the reserves on the bank balance sheet. And if the price is low enough for that cost of credit, then the banks loan it out and M2 grows. So they're all birds of the same feather. Do you know what I mean? And
Yes.
so I watch them all. I mean, I watch the Fed balance sheet, I watch the interest rate, I watch, M2, I watch global liquidity, and I watch the stock market. I mean, again, I go back to the stock market. That's the one that everybody's missing. I mean, if you, unless you were, unless we think about it now, we haven't really had, I mean, we had some very sharp bear markets, but we haven't had a truly prolonged and serious bear market since '08. Since '08, it always paid to buy the dip. No matter where the dip was, it paid to buy it. You came out and you got made whole and it went higher. And, having studied financial markets and looked at history of hundreds of years, and having been in them since the '70s, I just know that that's not a condition that will always be true. And so I think there's a real day of reckoning coming with the stock market, which is a bad thing. And I think that will reflect on the economy, spending, and everything. And I think the Fed will respond by saying, okay, fine, we're going to do what we've always done. I mean, their hammer is the printer. And so every financial problem looks like a nail. And so they're gonna turn on the printer. And we know what that means. The last time they turned on the printer, my fund went up, 98% in one year and 122 the next. Bitcoin went from 10,000 to 50 and gold went from 1365 to 2070.
But you wouldn't be positioned to the equities markets in that scenario as well.
No, I wouldn't. I really wouldn't because they're not cheap to begin with. I mean, don't get me wrong. If we have a hyperinflation like scenario, as anyone who's studied history knows, stock markets do well with really runaway inflation. I mean, the Venezuela market, the Weimar market, the Zimbabwe, I mean, everything goes up, at least because at least a stock represents a claim on a business that will reprice in the new currency.
Sure.
And as you further know, bond markets get just destroyed.
Oh,
You just
yes. On on that note, how do you feel about bonds? Yields, 10-year
oh
yield went down like 2-3% today. Big drop.
yeah. So look, I don't follow the day-to-day moves in them very much. I mean, I think bonds are certificates of confiscation, and it would not surprise me.
I've
It
never
would
heard that
not.
one before.
You haven't heard that before? Oh, yeah. Yeah, you haven't been around long enough. There was a great economist in the '80s named Solomon. He was at Solomon. Henry Kaufman. He was the Salomon Brothers economist, and he in the early '80s he coined the phrase, long-term government bonds are certificates of confiscation because we just come out of the '70s when that was true. Everyone who owned bond lost money on a real basis. Look, I mean, the bond market might rally here if we get a big stock market bust and the economy really slows down. I mean, the trade is to buy a long bond because rates will come down in the long end, and they might. But to me, that's picking up nickels in front of a steamroller. because I think that, we know that when that, if and when what I just described occurs, we're pretty sure that the Fed will do what they've always done, which is they'll print like crazy, and that will lead to, interest rates, higher interest rates and bigger deficits.
Yeah, I misspoke. I didn't mean it's down 3%. I meant it's down 30 basis points over the
Yeah,
last
no, I knew
couple
I
of
knew what you meant. Yeah, I
couple
knew
of
what you
days.
meant. Yeah.
All right. Well,
That's the percent trade. Again, everyone's really Wall Street loves this choice. He's a smart guy. And I can't argue with the choice. I mean, I'm glad. I'd rather have a smart guy in there than Janet Yellen, you know.
percent trade is, again, this is what the market thinks. The market could be wrong. Long bonds, short gold, perhaps even short Bitcoin,
Along the stock
stocks,
market.
long the stock market. But you think
Yep.
most of this is going to reverse because the thesis here for the percent trade is fundamentally wrong.
I think that's right. Now,
Yeah.
I may when I say reverse, I don't say tomorrow. I mean,
Yeah.
this trade could be on for a few months at least, and maybe even a year. But I don't see how mathematically it doesn't catch up with them because, if you just look, I mean, the one that really kind of bothers me because Elon's obviously a brilliant guy and has done a lot of great things, but he tends to be a dreamer and he tends to be unrealistic. I mean, he promised self-driving cars 5 years ago, and we're still not there yet. We're getting close.
Hmm.
And the notion that we can take $2 trillion, that we can take $2 trillion, yeah, Tesla's doing well, out of the budget deficit quickly without pain, without causing a massive recession or a lot of dislocation. I mean, I got to tell you, that's in my view, that's just an enormous fantasy.
And
It's
by the
just
way, even if you were to cut 75% of the government workforce, which is what Vivek said in an
yeah,
interview with Tucker Carlson, that's not going to fix the debt issue right away. It's not going
no,
to,
that's still there.
yeah.
Yeah.
I mean, it's not, they're not absolving the debt just because government employees are
The
getting
math,
laid
the
off.
math I saw, David, to get the U.S. federal government into deficit, into a balanced position, the two big ones that they'd have to attack, they'd have to take 40% out of Social Security and Medicare and 40% out of defense.
No, but
So,
Trump's not going to cut Medicare. He said that.
right.
So,
I mean,
so
that
yeah.
Medicare and
Hypothetically, you're right. Yes.
yeah, but that's what it would take, and the military industrial complex will go berserk if you cut them 40%. So, I just don't see it. I just really don't see it. But obviously, the trend is in their favor, and I look at because I don't want to see my country fall apart. I applaud the notion of trying to get the government reined in and under control. That's all good stuff.
Well, my country, Canada, has problems too, but that's a conversation for another time, Lawrence.
Yeah, as I understand it, you guys are in a similar situation.
Yeah, the current administration is falling in popularity for a number of reasons. Housing affordability and, as you know, the cost of living here in Canada also took a hit during the same time period that inflation hit the U.S. So, yeah, similar problems, similar sentiments mirrored by the population. Where can we follow you, Lawrence? Great talk. Thank you for
Yeah. Oh, nice talking to you as well. So I'm on Twitter. Everybody knows that. It's just my name, Lawrence Lepard, or I should call it X now. Everyone else is. And I have a website. Equity Management Associates is the business that my partner David Foley and I run. EMA2 is the website. And what I do that might be of some interest to some people is we write a quarterly letter, which is a macro overview of what's going on, kind of just the stuff we discussed here. Usually have some good charts in it. It's free. You can put your email into it, and we'll send. You'll get it for free. We'll never spam you. All you get's that letter. So if people want to read that, that's fine. So, and then as I said earlier, if you don't mind my plugging it, look for my book. It'll be out in the first quarter, early first quarter next year.
excellent. We'll take a sneak peek at the links down below, or not sneak peek, but just take a look at the links down below. Perhaps sneak peek at your book closer to the release date. We'll
Yeah,
see.
when I get close, I'll give you a shout. We can do a talk about it, and then I'll tell you the title and all this other stuff. It's a great title.
All
You're
right,
gonna
good.
love this title. It's
I'm
great.
already, I'm already liking the subline. So
Yeah.
we'll see. Thank you very much, Lawrence. Thank you for watching. Don't forget to like and subscribe.